The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. And, of course, we've got a market that was down a little bit more than it is now. It's up a little bit more than it was. Still off 8.5 points on the day. Volume still fairly brisk at about 2.9 billion shares as we went down. We've had about an 8 point. The center point's been about 1985, 1986 is where it kind of seems to be where the average has been of pushers and pullers today. I could see us maybe pulling back and closing at that level today. Of course, market's down a little bit on a few things. One is the demand in China and numbers coming out of China. And maybe just a little bit of exhaustion in the massive push into commodities over the last, you kind of have to say it started, maybe mid-February. And you really want to get hyper-technical in some places, even in mid-January. But, we're still off 8.5 points. Is there a lot of energy on the way down? No. Is there any energy on the way up? Not any more than the energy on the way down. So it's one of those days where if you're sailing light and variable, that means that as soon as you get going one way, the wind turns and goes another way, and you've got to kind of take a tact. So a little movement up, a little bit movement down. When I look at options, more than likely, we're going to come down and at least touch 1950 before expiration is over. And I think maybe we've just got a little taste of that today. I think we could slide over a number of days down to that 1950 level. Maybe at that point, if the volume continues light, maybe we get a rally. But I could kind of see a pull back into that 1950 level, even with light volume over the next few days, just because of the, and I guess I said it yesterday to one of the subscribers, and that is, I can't find a bear anywhere. Everybody is so bullish now, and doesn't mean that we're going to go crash or anything, but it does mean that it's not beyond the scope of reason to think that you get a pullback, even if it's small or smaller. 2.88 billion shares as we start the day. And, of course, every day we get together between 2 and 3.
The following takes place between 2 p.m. and 3 p.m.
It is. And what else can you say about it other than it's time to get this party started?
That it's all just a little bit of history repeating.
It is history repeating, and on this day in 1917, in Russia, the February Revolution, known as such because Russia's use of the Julian calendar, of course, back then, I think they use our calendar now, begins when riots and strikes over the scarcity of food erupt in Petrograd. 1 week later, centuries of Tsarist rule in Russia ended with the abdication of Nicholas II, and Russia took a dramatic step closer toward the communist revolution, and of course, the misery of its citizens for a good 75 years later. They had a short respite and right back into pretty much what Russia is, which is the really messed up folks on the far right side of the map in Europe. And it just seems like they maybe live under a curse of everything from alcoholism to drug abuse to their political system that guarantees the misery of almost all and has George Orwell wrote in Animal Farm, some pigs are more equal than others. That's kind of been it since the commies took over in 1917. Of course, few places in the world have ever killed as many people of their own citizens as Russia has. Of course, in World War II, you can make a great case that some 20 million of its own citizens were killed off, a great deal in the Ukraine, in other areas where they didn't quite like them as much. And why no one was looking, decided to do it. Of course, we all know how great socialism and communism is because it almost always ends exactly like Russia did. But I do digress. We're going to start looking at charts in a little bit, but I've got kind of just a little thought to think about here.
And now, deep insights and random thoughts.
I love it. Somebody in the den said, the market's so bullish you have to go to the North Pole to find a bear. Kind of could it be? Interestingly enough for me, I was looking at a bunch of tech news over the evening, and it leaked out. There was a giant cabal, and for everybody that wears the aluminum foil helmet, thinks that there's some giant cabal that wants to take over the world and the new world order. A bunch of people actually do something to make you think maybe that's actually true. We saw that over the weekend. The details have started to leak. But the masters of the universe in Silicon Valley, a handful of people, including a former presidential hopeful from the last election cycle, people from the National Review, other folks in the media, all got together at a very swanky place off the Georgia coast. This is kind of like a place where, you know, if you got $20-30 million, maybe you don't have enough to go there. So they dragged all the titans of industry there, mostly the people from Silicon Valley, to get together and decide our next president. They didn't think that we had the wisdom to think about who we wanted to elect president. So they all got together over the weekend and started making plans. And it's kind of very interesting to see that it's not just the robber barons of the early 19th, 20th century that controlled the newspapers, but we have almost the exact same thing happening again. And that is a great deal of Silicon Valley has rose up, decided that you're kind of a dummy if you vote for a certain individual, and they're going to do whatever it takes to make sure that he doesn't get elected. But it kind of is very interesting to me that what they fear most, of course, is billionaires running the country and having a say-so. And what do? They all get together, the billionaires, and all decide that they get to decide what's good for us. Not only the political class, but now Silicon Valley. I'm looking for the aluminum foil, folks. This is a disturbing event. We'll talk more about it when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
To reboot during the break. We are having some kind of difficulties, but hopefully they are all cleaned out now. Anyway, as I was speaking before the break, very interesting deal where everybody wants to get money out of finance. And of course, as soon as it doesn't go the way they want, everybody wants to throw cash at the problem and decide that actually there isn't enough cash and we're going to impose our will on the American people by throwing as much cash as possible. Now, I try to stay out of the political issue as much as I can, but probably the attack and or attacks that are going to occur in the very near future probably have a bit of a issue, and that is retribution in the past. We've seen it when Morgan Stanley's CEO came out and it said something that was not so too friendly about our current president, and within a day or two, they faced another $5 billion fine. I could only think what would happen to Silicon Valley if they continue down this road and maybe a certain individual is actually elected. We're going to go to Don in Odessa. How you doing today, Don?
I'm doing fine, but I lied. I have to confess. I just lied.
Okay.
I lied about wanting to know about the SPDX. The only thing I really wanted to say is bravo. I'm glad somebody is speaking out about what you just did.
Well, I think there's a lot of people speaking out about it.
Oh, there are, but not that reaches thousands of people.
You know, it's to me, if there is not a element that goes back into trading, then I try to avoid it. But to me, that the first thing I thought about when I started seeing this is, what if Trump gets elected and all these people that have come together as some kind of cabal actually have to deal with him? Now, he's kind of already come out against Apple and their encryption scheme, then kind of moderated his position for H-1B visas to make them a little happier. And so, why we can't guarantee anybody's going to be president.
Here's the way I feel about this whole thing, and I know this is.
I'm wondering the wisdom of a collective handful of people that all live within 20 miles of each other deciding what would be right and what would be wrong for the rest of the country.
It's not the way we were built.
What's that?
I said that's not the way we were built. That's not the way the country was formed.
Well,
you're absolutely right.
I don't know. From time to time, we did have the robber barons of the early 20th century, 20th or 19th. I never can get that correct. Anyway, the early 10 to 1940, we had the people that owned the presses. We had the people that owned the railroads, pretty much all the parts of production. And they were able to kind of dictate what's going on. But even to see lately, companies like Twitter actually going after political speech that they do not like. And I'm not talking about KKK members, just literally erasing people's emails for the particular candidate that they don't like. It's kind of a bigger issue to me, which is what happens if all these people that they are now savaging actually do win. And it's not just a single guy, although I would say probably 85% of it has to do with a single guy. But there's still 15% out of there of where they, especially Twitter over the last few weeks, trying to change the discourse by basically erasing pro and negative comments depending on who they liked. And that's what the bigger thing out there is, while the internet gives everybody the ability to voice their opinions, it's kind of concentrated in a handful of people: Facebook, Twitter, Snapchat, and some others. And it really looks to me like they have a very paternalistic outlook, where they have decided what we're going to do and are getting extremely in it. I don't know what would happen if General Motors decided to pick one candidate, or Ford or Chevy, but it doesn't seem so far that that's moved. But I wonder if they would actually go to the links that they discussed this weekend that was reported.
Can we relate this back to the economy? If you like the way the country has gone economically over the last 104 years, vote for somebody that the powers that be like. That's about all you can say about it.
Well, you've got to almost think that it's the cabal this weekend. It wasn't like everybody from a single party or anything else. It was like all the people that think that they always know better got together from all the parties and said, we're going to decide who you can and who you can't vote for, and we're going to actively go after them. Kind of interestingly, I watch a lot of podcasts, and actually are in one on Thursday nights that have to do with technology. But I was watching one that normally comes out on Friday last week. For some reason, it was delayed, and I was watching it last night. And this is supposed to be what's going on inside Silicon Valley about Snapchat and what Facebook's doing and everything else. 90% of it was, I'd say 95 or 85% of it was devoted to politics, and only about 15 or 10% that had anything to do with technology. So I'm seeing that there is kind of a sea change in that Silicon Valley is deciding to become extremely political. And of course, what are the ramifications for the stock price? Does it go up or go down? Do they alienate people? And do they alienate the kind of people that can really do major harm to them after the election cycle? You want to hang on?
No, I got to go.
Okay.
Just
Thanks.
wanted to say bravo.
You bet.
Bye-bye.
It's not a political opinion. I think there's enough. How can I say it? There's enough blame to go around everywhere. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we are back. Give me just a second here. I wanted to take a look at Alcoa, some of these other stocks. Starting to see kind of a move. Alcoa did try to get up yesterday into the December 29th high, $10.27, 39 million shares. Got into it 41 million shares, so about the same volume, but probably more interesting to me is the energy on the way up. We had kind of a 3 or 4 days of what probably could have been looked at as short covering. Pull back today on lighter volume so far. And of course, you can make a good case. This is an ABC up starting from January 20th to the February 5th high, back to the February 11th low, and a completion of the ABC up here. Now you would be looking for some kind of retracement. If we just looked at a few of them, just off the last one, 894. Let me zoom in on here just a little closer so we can take a look at it. 894 would be just a 382 retracement, which is not that far away. So I could continue to see that maybe we have continued weakness. As I said in the first segment, I'm looking for, at least options are telling me that we should look for something around 1950 to the downside over the next week or so. And at that point, find out whether or not options continue to point down, but not a huge matter. I mean, what are we talking, 38 points down? That could happen in 5-10 minutes these days. But I get kind of a real sense that there was kind of an exhaustion move to the upside in just about everything. Of course, crude lower today. And I think we could have that kind of pullback over a number of days. We'll watch the volume. We're printing about 3 billion shares on the New York Consolidated Tape now, and that would be it. That's it. Let me get some other stocks up there. Here's some list of a few that I was been looking at. Copart. This one was kind of interesting to me because it did test its November 25th high, $39.86, 3.2 million shares. March 7th, $40.09. And we're kind of tucking back into that. Again, fairly light volume so far. So we'll continue looking at what's going on in that. But energy, a little less on the upside to the downside. But as many of these stocks are starting to at least tell me probably a trading range, and of course, quite a trading range back off the previous lows. Even if we just go back to February 11th, that's $33.18 on Copart. But the energy, a little less on a great deal of these stocks. Other ones out that are kind of interesting to me are ones that have done some 618 retracements. We see that in Charles River Laboratories today, CRL, and that is it. $75.94 was the high yesterday. We've got a doji today, but this thing seems to have a lot of dojis in it, so I don't know if you can make a big case on that. Certainly you can make the big case on the 618 retracement. And that takes us, 75, is that right? Yeah, 75.53. So we have gone over that. We're kind of right at it now. The energy off the bottom on this one also kind of a little different. You can make a fairly decent case on this one that it has been a move up on very light volume. You can almost make a nice little ski slope off that February 9th low, and that would be it. But interesting nonetheless. And up to confluence are the global energy sector. We've been looking at a lot of these charts over the last few weeks as we talked about confluence. A fairly nice confluence level on the Global Energy Sector Fund, IXC. It also had a nice gap out here when this thing gapped down on monstrous volume on December the 7th, a day that will live in infamy in 2015. This is an ETF, so it's not going to have monster volume, but you did have 220,000 shares, got into it with 290,000 shares on March 7th, and we're back into it. But you did go right up to that confluence level that came in at $29.44 to $29.52. If you'd been long this thing, there are two big things. One, you had some fairly decent energy off the January 20th low to the February 4th high. If you then look at the C to D leg from February 11th up to this March 7th high, that would be, a lot less energy. It kind of metered its way up there and went right to the confluence level. So if you've been long this, I would have said that yesterday was a pretty good signal to exit stage left. What else do we have out here? The Coca-Cola Company. 35 million. If you had 35 million shares on October 22nd on Coca-Cola, came into it with 21 million shares on December 16th, and today into it with 20 million shares. This thing's been bucking at the highs. Normally, if you have a up market, that third time is the charm, or a massive failure. You really didn't have a great deal more energy on the way up than the way down. But of course, probably a lot of people looking at these companies at highs, not to invest in them, not to trade them, but to look and see whether or not people are continuing to go to companies like Procter & Gamble and others as a hedge of a declining economy. This one's still hanging at the highs, would say that you have to at least worry about a high in the market coming around. Post Holdings. This is the real estate company, if I'm not mistaken. Let's go look at them. Post Holding manufactured markets sell branded and private label ready-to-eat cereal. Oh, this is the other Post. For some reason, I was thinking Post Holdings or Post something is an ETF I've been looking at, or not an ETF, but a REIT. But this is Post Holdings, the company that does do cereal. So we're right back on the theme of being in a safe haven. The high on September 17th, 1.2 million shares at $71.27. You attacked it on 500,000 less shares on November 30th. We got back up there to a couple of days ago with a tiny bit more volume, 780,000 shares, but it's tucked its way back in here. Now, this is one where the energy on the way down from that November 30th high to the low on January 20th, compared to the energy on the way up, was decent. Let me put it that way. It was higher than on the way down to January 20th low. So I think you can still make a case for a bearish option on this market. We've got some of these stocks that tend to be the hideouts during a down market, hanging at these highs. Not a lot of volume just yet. So we'll be watching this very closely over the coming weeks. We'll be back in a minute.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we are back. What happened here? I could not get that correct. There it is. We got... okay. And thanks, Don, some of the other people that sent me some emails over the break. I appreciate your feedback. And, of course, you can email me at path@tfnn.com, and we can take a look at it. The biotechs had some requests during the break. Of course, you can always call me on the phone at 877-927-6648. Question about the biotechs. Let's see if I've got... I guess the question is, if you were long, could you stay in it? And man, I tell you what, talk about a weak bounce in the biotechs. Again, political fodder, and, just a huge bounce to begin with anyway. These things have come off, of course, a fairly high level where everybody wanted to be in them. Now, just about nobody wants to be in them. But you got to think of about a $32 bounce in the IBB. Kind of tells you everything that you need to know over this last move. Almost no volume in the or energy compared to the move on the way down at 343 high on December 29th to the 240 low on February 9th. But it is interesting, and that is that, man, if you look at the bigger picture out there, this thing still hasn't been made a 382 retracement, and I'm not exactly sure if it can. You look at the volumes, notwithstanding today, 2 million shares in a day where you've had some fairly big moves up, and it continues to be problematic. What else can you say about it? I don't think I could be long the IBB. Maybe it continues up and you get a 382 out of it. But to me, you're one headline away from anyone in politics saying something that may make everybody bolt once again. I would rather wait until this thing bases out. You need a test of the 340 out here. You probably need to make sure that no one talks about this stock or the elite sector for a while. I keep seeing far too many people trying to dive back in. And actually had some comments with some of my subscribers about, and maybe somebody in the den, I think it was somebody in the den, about one of the old adages, and that is that generals always fight the last war. And it seems like, there's always a reversion to the mean in a lot of these sectors that people just will not ever think about. And if you move that high, then, maybe that consolidation is going to be a lot longer than you think. As I said in my newsletter this morning, the quote from, I can't remember who it was, but I think it was a Chinese gentleman that, of course, had a lot of wisdom, maybe about 1000 BC, who said that the light that burns twice as bright only burns half as long. And I think that's kind of what you've had in the IBB. You've got a lot of overhead resistance, and you thought that these things are all going to do instant V's back up to the previous high. Gives you a good indication that at a minimum, you've got, if you're looking for higher prices in the overall market, there's sector rotation. And at the worst part, you could make a case that this is a brutal ABC down from the December 29th high. In fact, if you wanted to look at a absolute scary double black diamond move, this thing's only retraced 30% so far up to that 272 high yesterday. And the energy's been pathetic in it. But a 1-to-1 ABC would take you to 168.23 on just that move. So I would be extremely cautious if I had to play biotechs. If a gun was put to the side of my head, I would say the only way that I'd want to be in these is with a defined risk, and that means options. And, you know, maybe yesterday was the only day that you could have gotten in with the price points being about right. But I would still be very scared about it. Anyway, Confucius? No, it wasn't Confucius. I actually put it in my newsletter today. I will check for who actually said it and post it in the den and say who it was. It's not somebody that you normally think of, but he's a pretty smart guy. In fact, I think a lot of times with no radio and television, a lot of time to think, maybe people were a lot better off, at least in the thinking department, when there weren't a lot of things to distract them like elections, news, 24-hour cable, financial infotainment, of course, everything but the power trading hour. What else do we have out here? Because it never could be me, right? I'm exempt. Other things, VCA, woof. And of course, what are we looking at in this one? You know, you've probably, again, a great deal of these stocks look like a bigger trading range. The energy off the lows was okay. It was about the same as the way down in a lot of these. In this one, what I'm looking at is it getting back into this gap down that started the whole thing on the 4th of January was 745,000 shares. You got to know it was 660,000 shares on the 4th. Yesterday, you kind of tried to poke back into it with 662,000 shares. A little bit sideways so far today. And again, probably wouldn't pull the trigger short on this one, but I think there are a lot of them that you could. January 27th, this thing did spike with 1.3 million shares, so you can make a case that that 1.3 million shares is actually going against that March 4th high was 660,000 shares. So being a number of things. Also, another thing that we had been watching, or I'd been watching, was a great deal of Gartley patterns in the market over the last few days. I wanted to take a look at some of those quickly. We've got about a minute here. We'll try to get to the rest of them. Armor residential REITs. Maybe this is why I had REITs on the mind for post earlier. But man, these things are starting to look rather problematic. I like this one because it actually did its retrace. It did it right into a gap down. That gap down was on the 13th of January, 880,000 shares. Got into it with 550,000 shares yesterday. And I'm kind of making a little doji out here today. What I really find interesting on this is just the light energy in the C to D leg that we had completed pretty much yesterday. And maybe could get a little bit higher. $20.92 was the target on this thing. So you're fairly close out here. But the C to D on this thing, the energy was basically half was from the original X point on January 5th down to the A lows. You've never tested that $16.61 low from January 20th. But it's interesting nonetheless. We'll be back in a minute. You still have time to give me a phone call at 8.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
As I said, I saw a great deal of Gartley patterns over the last few days, and most of these things are kind of setting up with kind of lighter volume on the C to Ds. So there's a handful of these things already setting up. Of course, and we're off 16 points on the S&P cash, 1985. Volume's pretty good at 3.2 billion shares on the New York Consolidated Tape. You know, there's I guess I'll get to this again, but I just can't find any bears out there. Always makes me think that there is a pullback coming when everybody, including the people that think they're going to be bearish, are getting bearish, but waiting for higher prices, and the higher prices at least do not come in the moment. Maybe they come later. But certainly ARM or residential REITs, very interesting. This one, very, very light volume. I wouldn't be shorting a $20 stock out here, but it does give you a kind of a window into some of the sectors that may be weaker. I know we have a couple of the home builders actually coming out with earnings in the coming weeks or week, and maybe 10 days or something. And it's going to be interesting. Some of these other stocks that look like maybe they're up on lighter volume. Bank United, don't know a lot about this company. Do notice the chart out here, though, in the Gartley patterns that we have for the art of timing the trade charts. A lot of energy on the way down again from the X to the A point. 2.1 on my power law vector indicator, 1.4 on the way up. That means that you can look at that at being maybe like 30% lighter energy on the way up. It did do a bearish butterfly. Your target was 35.04, got to 35.01, kind of close enough. Not a lot of movement out here in these yet. But again, these are the ones I may not be pulling the trigger on, but I am watching these as a group move. And I'm more of a, if you listen to this show for any length of time, I don't spend a lot of time on the S&P itself. I tend to look at the broad amount of stocks out there to give me a better indication of it. So I kind of give target numbers on the S&P itself. I spent a lot more time, especially in the last few years, concentrating on the stocks themselves. BMO Financial Group, another one. Energy not coming off as bad as some of the others that we've shown previously, but another good Gartley pattern. The BMO Financial Group down 2 on the X to A leg, 1.7 on the leg up. Your target was 57.32. You got to 58.10. We've come back off of that from yesterday. Is that right? I don't have it for today. We don't have a lot of time. Let's just move on to the Bank of Nova Scotia. This is another one out here. Energy a little bit better, in fact, just about the same on the way up. But you have kind of hit the wall on at least the Bank of Nova Scotia, BNS. Your target on this Gartley was 45.18. If you would have been jumping in this, you probably got just about everything that you're looking for in this one so far. I don't know if there's a lot more you can say about that. Some of these are better than others. BXMT, Blackstone Mortgage Group. This is another one that's set up its Gartley pattern. Looks to me like this one's already started down. Nice Gartley. Energy was about 20% lighter from the X to A to the C to D leg. And that kind of wraps it up for the day. Hang on, we've got Tom O'Brien for the next 2 hours. Andy Heck is one of his guests, and then I would imagine between 5 and 6, my brother from another mother will be having his show. We'll learn more about commodities, maybe his view on it. I think we kind of made a short-term top yesterday. In the meantime,
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.